Hello and welcome to another update video about Aptos. I think it's time for an Aptos chart. A lot of people asked me for an update, so I tidied up the chart a little bit. We're now dealing with a WXY correction here. Looking at the context, two things to mention here about Aptos. The first one is that it's a short price history, and I've always stated that this is a higher risk one because of the short price history. Yeah, it literally was launched here in October 22. However, it had a nice impulse to the upside. Yeah, really nice 5-wave move. Yeah, we did count that at the time, and all good. We're then doing here this correction down at the moment, and it has morphed into a WXY pattern because the last leg down here made a new swing low below the 10th of March low. It is, however, an overall 3-wave move down at the moment, so it's not impulsive on the way down. The question is just how deep do we go? And to figure that out, I will share with you my thoughts around Fibonacci retracements and the subwave structure for Aptos. So let's take into account, first of all, the bigger context, the greater context. You can see that we have now pulled back in a possible wave 2 correction after wave 1. Yeah, we've pulled back into the zone between the 683 level and 1179. So between the 78.6 Fib level at 683 and the 50% Fib level at 1179, with a golden ratio in between at 974. Now we've broken below 974, which means we've broken below the golden ratio, which indicates we could be on the way to the 78.6 retracement, which is the next key target based on retracements. Yeah. Basically, I can take off the chart now the 50% retracement because it's not meaningful anymore. It's all about these two Fibs now. Can we find support in here? This is the area where I would like to see this turn around, because any sustained break below the 78.6 retracement is not going to be healthy. With such a young asset though, I cannot rule out that it will pull back to the 88.7 Fib level. Just be aware of that. It's a very young asset. Very young cryptos tend to do that. And I have to take it into account given the WXY, because it's become a more complex correction. However, just to let you know, any asset, especially cryptos, that drop and sustain below the 78.6 retracement, these setups often don't work out anymore. Yeah? So if it breaks below the 78.6, it's much higher risk. Higher risk than it already is. Okay. So the wave W down, as you can see, very nice 3-wave move down. Yeah, don't need to look into the subwaves here. The X wave, see, that's the thing is, there are two possibilities now. Do we consider the X wave here or here? For me, I would like to put it here. It looks better looking at the proportions, but looking at what other coins are doing, I think it fits better here. But then I would have, looking at the subwaves, I would have an A wave here. I would have a B wave here. And I would have a B wave here with a very, very short C wave. Not happy with that. The C wave would be an ending diagonal. It would be truncated. I'm not happy with that. Yeah. But it just works best in terms of what we've been doing on the way down here, to be honest. So it's a bit of a distorted one, but probably still best in terms of what we're doing here on the way down. If I compare it, especially if I compare it to other coins, because on the way down here in this Y wave, then we have an ABC structure again. This is basically in line with what Bitcoin, Ethereum are doing, and works best in my opinion. Yeah. And the A wave is just a very nice 5-wave move. This B wave is super shallow though, super shallow. So very little upside momentum. Okay, and the C wave is playing out now. With that information, this is my primary count. With that information, we can calculate a target now for the C wave. So a target for the C wave is we take the length of the A wave, we go to the high of the B wave, and the very first one that we normally consider is the 61.8 extension. That would again be a very shallow C wave. We talk here about 843. Then we've got the 1-to-1 ratio, which is more likely. That's at 689. As you can already see, that is pretty much an overlap with the 78.6 retracement. So there's good confluence around the 78.6 retracement. Now we can also take a look at the length of the wave W, which seems very long, to be honest. Then we go to the high of the X wave and we consider a target for the Y wave. Now again, here we're looking at ideally the 1-to-1 ratio. Now that's far too far down. Yeah, it would invalidate this upside momentum. However, we've got the 61.8 extension, which is also, it's not that common, but it's still a common target for a Y wave. And that is also pointing towards that $6.90 level roughly. Here $6.95. Pretty much again an overlap with the 78.6 retracement. So really there's 3 Fib levels pointing towards that 680, 690 level. I would not ignore that. I would pay attention to that level particularly. And at the moment, I have no evidence that we have bottomed here. Very first early evidence that we have bottomed. And we don't get me wrong, we don't need to get into that area down there. At the moment though, it seems likely because we have no evidence we've bottomed and we've lost support. So ideally we're heading into that region. And however, the very first early indication that we have bottomed here would be a break above the B wave high. And we talk here about $10.96. All right, that's my update about Aptos. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.